The seats are full again. We've still got a bit to get through this afternoon, and I'm really glad, even if it's kind of a worn out line by now, that so many of you are back with us. And hopefully we'll have time at the end for a question or two about Bitcoin and altcoins. Once Philip's done talking up Bitcoin a bit. In the next few minutes, we want to talk about whether and why it makes sense to get into Bitcoin and altcoins right now. So, the year 2016, 2026, probably went a little differently than a lot of people expected, at least when it comes to the timing. What I want to know first is who here is familiar with our Tuesday interview. That's already quite a few. That's reassuring. So we can basically hit both groups here. In the next few minutes, we'll talk about why getting in can be worth it. Quick info for anyone who doesn't know it. Oliver, Michael, and I do an interview every Tuesday at the exchange where we talk about how the crypto world is developing, how US indexes affect the economy and liquidity, and of course what that means for Bitcoin and altcoins. And we want to pick up on that a bit and also point out what you should be doing right now. I'm sure everyone's already heard a ton of market opinions today. It's the second day of Invest and it's already the afternoon. So now let's look at Oliver's view of the market and where things could actually go from here and what you can do as an investor right now. First off, we need to get these slides to advance. Can you do it with the mouse?
I'll use the key.
Then that's your job now. Right. We also usually look at the US indices on Tuesdays. First, we do a quick recap of what happened last week. Then we check the US indices, not all of them, just the big ones, the ones that matter for crypto. Oliver, why are the leading US indices such a big deal for crypto and all that?
Yeah, the biggest capital market in the world is the US market, with about a 60% global share. That's a pretty huge number, and that share is backed by the liquidity that's flowing. I still think liquidity is the water that makes the wheel turn. Without liquidity, nothing happens. If money flows in, prices go up. If it gets pulled out, prices drop. And the US market is the one that sets the tone, so we have to follow it.
We've already mentioned a few times in interviews that with the broader market getting hit right now, crypto doesn't get a pass. Last year, we saw Bitcoin's all-time high at $126,000 US. It would have been great if it had kept going with that push, but you've also kept saying those dark clouds over the US economy would eventually break into a storm, a so-called rollover that ends in a bear market. The timing, we'll still wait and see, because right now the US looks pretty solid, especially if you look at the S&P 500 and NASDAQ. Even with crises, wars, inflation worries, you name it, and a lousy labor market, we've still seen all-time highs.
Yeah. Anyone who tunes in with us regularly on Tuesdays knows we've been really solid, at least on the US index side. We've been calling it well for months. Almost years now, as much as you can. But today we want to build a model portfolio. And to set that up, it still matters to look at the indices. Where are they? Where are we in the market? So we can validate the call. Does it make sense to do something now? And if yes, what? And I can only give you my personal take here, and it's this. The US indices will keep running up for another 2 or 3 months. Probably with a small correction in the middle. The way it's grinding higher right now isn't going to last forever. Not 1.5%, 2% a day, but we'll get a small pullback, and then in my view, we'll start to see a rollover toward mid-year. So for anyone who's also invested in US stocks, that could be useful info if you buy my take on it. And because the US indices basically pull in or push out liquidity, that means our coins will move in sync with that. Meaning mid-year into Q3, that rollover isn't just us dumping hard for a month or two, it's more like a real bear market forming, like what we saw in 2000, 2001 with the telecom and when the dot-com bubble popped. That can stretch out over a year and a half. That's the scale you've got to look at it on. And still, before that, we'll probably get one last hype rally. We're already seeing a bit of hype in the big US indexes. We'll see that, and we'll end up seeing it in Bitcoin and the altcoins too. Whether Bitcoin prints another all-time high is up in the air, but it'll definitely get pulled along by the Nasdaq. And that carries through the next 2 or 3 months. And of course, the altcoins too. I'm assuming the altcoins will at least revisit their last all-time highs. So in my view, we've got 2 or 3 really hypey, FOMO-heavy months ahead of us before then. And no matter how hard Trump tries heading into his midterms, business cycles are a thing. And in my opinion, they kick in around mid-year. And then we'll see that final rally and the hype into mid-year. And after that, a slow rollover into a long, deep bear market. But like I said, that's just my personal opinion.
Oliver, I've been asked a bunch in the last couple days, yesterday and today, even by people who watch our interviews, what happens after that? You always say we go into a bear market, and it's kind of like, I know you're not a big series guy, but it's a bit like Game of Thrones when winter comes. How long does the winter last, and what comes after winter?
Yeah, with telecom and the internet, when the dot-com bubble burst, it took a year and a half from the top all the way to the bottom. So this isn't like, oh, it's down for a quarter. This is a real drop.
Yeah, and after a year and a half?
Huh?
After that year and a half?
Then it goes back up. That's when we've hit the bottom. And then I think, especially with coins, we'll see the last really big bull run. Not because coins disappear, but the opposite, they become a commodity. Like open source software is a commodity now, everyone uses it without even knowing it, and it'll be pretty similar here. And then after that, the bull market after the big bear market that's coming, that'll be the one that really, puts big smiles back on people's faces. That's going to be really good. And after that, you can bow out nice and calmly because by then you've made your money.
When you talk about this upcoming bear market, which honestly sounds pretty depressing, and you said 3 months or 2 to 3 months, Oliver's not hard of hearing, it's just the acoustics up here really aren't great. If you think it's going to go down in 2 or 3 months, why would I invest now?
Yeah. Like we all know, coins just went through a correction. Bitcoin's dropped since October from 126 down to a low of 60. We saw the fear and greed index top out at just 4. Bitcoin and some big altcoins had the RSI down at absolute lows. And with a huge rally likely over the next 2 or 3 months, those are really good signs you should do something. Corrections have always been great buying chances. Sure, it's easier to sit back and say, I'll just wait and see. But I honestly think we're heading into these next 3 months. And there'll be 3-4 great months. It'd be a shame to just watch from the sidelines. So after this pullback in coins right now is a pretty good chance to catch those 3 months, even if you make profits and have to pay taxes on them. Honestly, paying taxes is a good problem because it means you did something right first. So second line. I I think you should still do something, since we're basically at the end of a correction and might be moving into the upswing now, these key next 2, 3, 4 months.
So either you jump in now and get a bit of that adrenaline to see if we get another peak up there.
Or you'll be mad later. Exactly.
Or you go in later and wait. Wait until it actually...
Yeah, one option is you either do something now or you just leave it. But if you leave it, you'll probably have to leave it for the next 1.5 to 2 years. And then you really shouldn't jump in. Then you should keep your cash, your fiat, keep your powder dry, like they say. And then bluntly, you've got to have the balls when the market is really at the bottom and everyone's like, this crypto market is the devil, it's a scam, it's never going to be anything. That's when you have to get in, and corrections were and still are the biggest opportunities. And that, it's easy to say, but way harder to do, because you've got to get over yourself, like right now.
Like right now? Your words, not mine. I'm just picking them up. Today, you want to prove you've got the balls. Meaning, we'll go with a scenario where we ride out these next 2-3 months. Let's say you're gonna... No, first, let's assume your market call actually happens. You need that conviction to really walk this path. We assume you're not invested yet. People who watch on Tuesdays know that's not true. But let's just park that model for a second. Your market view is right. You're not invested yet. And I, as generous as I always am with you, would give you 20 grand and you'd invest it. How would you do that?
Yeah, so I'd invest in building up and maybe later expanding a portfolio. In your example, I'd start by setting one up. I'd jump in right now, maybe with 1/3 of the money, then see if we dip a bit. And add with the second third. And then use the last third however you want. It's honestly a pretty good time to do something this week, next week, or the week after. And that's what DCA means. Buying in tranches. Yeah. You're building a portfolio.
There are a few ways to go about building a portfolio. I mean, you can say, I want this, I want that, I want something else. But there are different approaches. And with that come different calls you have to make about which coins or tokens matter for you. What's out there and how do you weigh them against each other?
Yeah, we basically have 3 options. One is, since there are a lot of crypto beginners who still want in, my tip is go to CoinMarketCap, cross out the stable coins and the top 15 coins. You can't really mess that up because they're big enough to survive a crypto winter. That's a broad, diversified approach. The second approach is you focus on one coin or at most 2, like I do with XRP. 70% of my portfolio is XRP. Not financial advice or a recommendation, but that's how I'm positioned. Why? People always say you don't build big wealth through diversification, but through concentration. So you focus on 1 or 2 things, hoping they take off, like XRP for me. I'm assuming XRP hits somewhere between 15 and $100 in the next bull market. And that's enough for me. And once you've built up some wealth, that's when you should start diversifying, like spreading out more broadly. Those are 2 pretty extreme approaches. The approach that actually makes the most sense is what's described in that top line. We all know the phrase means to an end, and you've got to be clear on that. Blockchain tech and crypto aren't the end goal. It's like a car. A car doesn't have a purpose. It's just a tool. You need a purpose for it. And it's pretty much the same thing here. Blockchain and crypto are tools, and the question is, where are the big real-world purposes? Because that's what matters at the end of the day. And that's how you should approach putting together a portfolio like this. Unless you're crazy enough to put everything on 1 or 2 coins.
You just said if you want to play it safe, quote unquote, you look at the big ones, leaving out stable coins, the top 15, I think you said. What makes you think they'll make it through this bear market you're expecting?
Yeah, because they're big enough.
Because it's just
too big to fail, as they say. They're big enough and they'll get through it. But like I said, you can also bet on other coins because ideally you're out again in 3 months. But if you want to stay in longer, then I'd stick with the big coins.
All right, let's look at what a portfolio like that could look like. I think you need to pull up the next slide again. We've
got the ones that are basically a means to an end. This is really about utility. The question is, on CoinMarketCap, we've got 100 categories. Over 100 categories you can use to sort all the different coins. And for me personally, we talked about it, and you told me, like, go ahead and build your own portfolio. For me, 3 use cases are interesting. Those 3 are finance, tokenization / real-world assets, and AI. Those are the 3 big areas I'd focus on right now. You can't do everything. You've got to be clear on that. So you should narrow it down just a bit, and those are my 3.
So you also picked the portfolio we're looking at here to cover those 3, let's say, areas with different weightings based on what you're expecting.
Yeah. All right, the finance part is pretty obvious. I think we all agree there. Blockchain and crypto is really shaking up traditional finance. That means a lot of processes, both the software side and the actual workflows, will be handled through blockchain and crypto going forward. I mean, we're talking about the financial market here, like in the biggest sense, the financial market is the largest market in the world. So this is about modernizing the biggest market on the planet with blockchain and crypto. It's a pretty great story, and you can make money on it too. And the second area is tokenization, real-world assets. Meaning if blockchain is the transfer rail, then something has to move on that rail. And basically it comes down to this. You can tokenize anything you can think of. So any real-world asset, anything that exists out there in the real world, whether it's a chair, a house, a car, a stock, a fund, whatever, you can tokenize everything and then move it using the right tech. And last but not least, there's AI. Think about AI agents talking to each other, trying to do business. They obviously need, so they can communicate, the right infrastructure. And if you tie those 3 together, then we're talking about an internet of value. Up to now, we've had an internet of information, and now an internet of value is coming. Basically, any asset can be tokenized and run over the blockchain. That can be exchanged, traded, bought, and sold as something with value. And the future, we know, is basically AI agents joining in on all this buying and selling as a huge new group of players. And if you put those 3 things together, it clicks, and you end up with one coherent approach. And that's why those are the 3 areas I'd focus on in terms of being purpose-built, in terms of utility.
Let's dig into an example around AI and these AI agents. If you haven't been watching our interviews, you've probably still heard it. People often use the fridge example or other everyday situations where these agents really make sense. What do you actually need them for? Because the whole space is so broad, it's hard to picture where this all fits.
Yeah, the classic example is the fridge. We've used it before, even in Munich. People love that one. The fridge, the smart fridge can look inside, see what's in there, and automatically reorder. The moment it reorders, it needs some kind of communication infrastructure. And if it's buying stuff, it has to be able to pay, that has to be super lightweight payment rails, and to pay, the fridge needs a currency. And it won't be euros, because it's not opening an account at some local bank in Fulda and wiring money from there. Instead, it taps into a blockchain where there's a matching crypto system, a coin structure, so it can buy the goods at Rue or whoever, use a smart contract to check everything arrived, and then close out the deal. And in a few years, every one of us will have helpers like that. Meaning, sitting here today, in 5 years, each person will have roughly 15 to 20 AI agents around them handling these deals. So if we've got 200 people here doing business now, multiply that by 15, and then you'll see how many new participants will be buying, selling, paying, and taking part in real-world assets on this new infrastructure. And that spreads out exponentially, explosively. And all I can say is I definitely want in as an investor if there's money to be made.
I told you from the get-go, don't do so much promo for Rev and the Kreissparkasse in Fulda. But we also want to look at the portfolio.
We can use the cooperative bank in Fulda too.
What?
We can use the cooperative bank in Fulda too.
Do you have an account there?
Or from Offenbach, whatever.
All right, let's look at the portfolio. I'll just stay right here. Anyone who's already talked to me a bit or has good ears can tell I need my water and my cough drops. Let's check out the portfolio. You already brought up the 3 areas. You said we definitely want to look at finance. We want to look at tokenization too. And with tokenization, I actually find it interesting, and we've talked about it a few times, that things are really moving, especially when you look at Wall Street. They're working hard right now to make tokenized stocks happen. That would be the next step, and it would also push 24/7 stock trading. But you've got that in the model portfolio. So let's go through the options one by one with their weightings, those little black numbers in our model portfolio. We'll start with the area, finance. And there you've got a pretty classic setup, nothing exotic, not the latest hot thing. Bitcoin, ETH, XRP, and Canton. Why those?
Yeah, it's the 3 areas you see here, like you said, finance, tokenization, real-world assets, and AI or KI, whatever you want to call it. The little black numbers next to them are the weighting in the portfolio. What stands out here? Bitcoin at 15%, ETH at 20%, XRP, of course, at 30% makes sense, and Canton at 5%. And I'll say this, anyone who just mirrors this is going to have a lot of fun with this portfolio over the next 2 or 3 months. When it starts sliding, if they just sit on it, they'll have tears in their eyes. We need to be clear on that because it's going to drop hard. And I'm pretty sure in 6 months we'll have totally different entry prices for these coins than now, lower ones. So yeah, if you get in now, in my view, you should also sell in 2 or 3 months, but it's worth it because you can pull off a nice multiple 100 to 300%. I think that's definitely possible, and this isn't some gimmick to hook people. The finance part, sure, Bitcoin at 15%. Everyone knows Bitcoin. Personally, I'm not totally sold on it because it's slow, it's expensive, but it is a store of value and it's well accepted as that. With around 60% market share, it's the biggest. You really can't go wrong with Bitcoin. Don't expect some huge performance though. We're at 76,000 US dollars right now. Maybe it goes to 90 to 95. Those are solid gains for the next 2 or 3 months, but it's not the big wow. Longer term, I'm expecting a lot more from ETH since it's still behind. ETH is Wall Street's favorite. It gets pushed hard, has the biggest developer community in the world, and it's definitely a key player because smart contracts are such a core part of it. Basically, rules for how things get done written into the contracts. ETH should absolutely be in there at a 20% weighting. With XRP, it's mainly about cross-border payments and providing liquidity. So basically, how can you move money from one country to another? That's XRP's main focus. The core focus of XRP, and of course supplying the liquidity for that transfer. So the second you wire 100,000 euros to the US, it gets converted into XRP. Those XRP get sent to the US over the ledger and then swapped into US dollars in a fraction of a second with a tiny fee and a minimum fee. No middleman. The liquidity sits in between euro and US dollar for the transfer. That's what's happening there. And the moment that really takes off, I think it'll be one of the biggest stories the blockchain space has ever seen. And lastly, I've got Canton in the mix. With a 5% weighting, with Canton, a bunch of banks, exchanges, and consulting firms teamed up, big names, like Goldman Sachs, and Deutsche Börse is in too, and said, we've got different networks, and we need to connect them. So they built a blockchain where you can basically create subnetworks and then exchange assets, real-world assets across these companies. It's an interesting one because the special thing here is you can build a certain level of privacy into these subnets, meaning you can see the blockchain, but you can't see who sent what to whom. With all the other chains right now, it's still different, and that's obviously a problem. No financial institution wants everyone to see what it transferred to which other institution, and that's why I think Canton is really interesting. And since the coin started trading on platforms, like since last November, it's done really well versus Bitcoin. Like I said, I'm fully invested, but I'll probably buy Canton again in the next few days. I haven't had any yet. That way I'm not messing up my tax advantages by adding to a coin I already own. I'm buying a new one instead.
So when you say Bitcoin, ETH, and XRP still aren't anonymous, do you think that's going to change anytime soon?
Yeah, I mean, at the end of the day, it's like this. All the big chains are getting upgraded, like upgrading an old car with an airbag or a seatbelt to make it safer. And the dev teams behind the classic blockchains will definitely say, yeah, privacy matters. We'll upgrade and build the right options so transfers can happen without you being able to see who sent to who. That's why privacy coins like Monero aren't on this list, because I think at some point these privacy blockchains might not matter as much anymore, but that's just my personal opinion.
Let's take another look at the next area, tokenization. So there you've got real-world assets plus Chainlink and Ondo. Chainlink is 10% and Ondo 5%. What's behind those two coins?
Yeah, conceptually, you'd actually flip it because Ondo is basically a tokenization platform, meaning if someone has an asset, a real one like a house or a property, they can use that platform to tokenize it, basically break it into digital chunks that can then be traded on the right blockchains. And the moment you tokenize, say, a stock, like since Nasdaq is eventually going to trade 24/7, that means the shares have to get tokenized somewhere so those tokens can be traded around the clock, even on weekends. But we all know stock prices move. A property's price can change. A residential unit can change. So just because a token sits on a blockchain doesn't mean it's fixed. It means its value can change and its parameters can change. And those parameter changes also have to get onto the blockchain. And that's where the so-called Oracle problem comes in. Oracle problem doesn't mean the Oracle database. It's the question, is the info you feed into the blockchain, which the blockchain then uses to? So the question is, is this info actually legit? And that's where Chainlink plays a really special role. Chainlink makes sure the data written onto a blockchain is valid, trustworthy, and accurate. So Chainlink isn't a blockchain in the classic sense like the ones up top. It's an extra service that's absolutely needed for the whole system to work. With Ondo, I can tokenize, and with Chainlink, I can basically, and that's the biggest thing in this segment. That's why it's sitting in first place at 10%. With Chainlink, you can verify that the tokenized real-world assets, where the parameters can change, that those parameter changes are actually correct and valid. So yeah, two really, really interesting coins in the real-world asset tokenization space. That's what it comes down to at the end of the day. If you look out a few years, everything, really everything, will be tokenized and tradable across blockchains, exchangeable. And that puts it right back into finance. That's its own kind of chain of events too.
So do we even still need classic stock trading then?
Yeah, for the older ones among us.
For who?
For the older ones among us.
For the boomers.
Younger people will just do it on their phones because every stock will be tokenized and tradable, like buying XRP today or buying ETH.
This isn't age discrimination or anything, but Oliver and I have this running joke where he doesn't get my jokes and doesn't find them funny, and I don't get his either. So it's always a boomer joke or a millennial joke. Let's get back to, you get me. Let's circle back to that last category, AI. We've brought it up a bunch today, I have, and the others too, because the big topic right now is obviously AI and AI agents that'll keep coming up. And you brought two picks again, weighted 10 and 5. Which ones and why those?
Yeah, so I've personally had both of those in my portfolio for a lot of years, basically since they've been around. So I'm not pitching them here because of that, but because logically I just find it really convincing. Before you, we always talk about it so casually, like, yeah, the AI agent will just do it. But just like a real-world asset has to be tokenized first so it can move on a blockchain, an AI agent like that has to be created too. It has to come into existence. You have to define it, the rule set. I want an AI agent that works independently of me, goes across different platforms, watches the moves, figures out which coin or which stock is hot right now, and then with a max risk of 5% automatically buys for me and sells again. Once a certain threshold, up or down, is hit, you can program that. But first, you have to define the AI agent, and the project that does that is Virtuals. So yeah, Virtuals is one of the really big names in the AI category. And for me, it's a pretty interesting one. The moment you've got AI agents, they're way simpler built than we are as humans. They run on a basic rule set and need to share data pretty fast via blockchains that are built and programmed specifically for that. And the blockchain that works best for AI agents to interact, like if they're active in finance, is Near. So thematically, the order should really be the other way around. But since Near is the bigger project in the AI space, I weighted it more, like 10%, versus Virtuals at 5%. Now you could, of course, say, up top, you could also add XLM to XApp. You could also add Solana in the top tier alongside ETH, but at some point you've got to draw a line and say, okay, this many coins is enough. And looking at this, I hope I landed at 100%. Then, in my view, this is a really solid mix of what you can hold right now across the three most important coin categories. And I hope it also came through pretty clearly why it's set up that way.
All right, say the portfolio's in place. You've put it together the way you just laid out. then what's next? What do I do then? Do I just go to sleep? Do I say, I'll look at it now and then check back in 2 or 3 months? What can I realistically expect? And if I bought the portfolio based on your market view here, what do I need to pay attention to?
Yeah, I don't want to stir up FOMO or hype or string you along here. But in my opinion, if what I think is going to happen actually happens, meaning over the next 2 or 3 months, we get a really nice move up, pulled along by the US indexes, especially the Nasdaq and the Russell, then I can totally see altcoins in particular putting up a strong run. And if I look at XAP, which is sitting around $1.40 right now, I think it can absolutely triple, basically plus 200%. And that means performance-wise, outlook-wise, I can definitely see 200 to 300% if everything goes right over the next 2 or 3 months. And to me, that's a one-time opportunity. After that, once the big US indexes roll over, once liquidity gets pulled out of the market and our coins follow, it can fade pretty fast, and if you wait too long, you could get wrecked.
When you say it's a one-time opportunity, but there's another chance too, since you're saying after the bear market comes the next bull market, what's the worst case if we set this portfolio up?
Yeah, so for anyone who's asking, is it worth jumping into crypto? Here's what I'd say, just as a mental, emotional safety net. If you're buying now and just rides it out. Even if he's buying 1 XRP at $1.43 right now, and in the bear market it drops to 45 cents or 30 cents, which can totally happen, if he just keeps hodling, sits through the bear market and says, doesn't matter, I'm letting it run, yeah, I've got losses, but then I'll catch the next bull market, and I think that one's going to be really amazing again because it's the last truly big bull run before this whole space turns into a commodity. Then he can basically only win. In this whole thing, it's not really whether you lose, it's just how much performance you get over 5 or 6 years. So looking toward 2030 with this portfolio, a 10x, 15x is totally doable. But it really is just plain hodling. You don't have to do anything. You just have to keep your nerve in a big bear market and not sell on some knee-jerk reaction like I'm never doing this again. Selling, sure, no problem, but you have to get back in. Otherwise, it was all for nothing.
Let's go over the difference again, just so it's clear. There's hodling, just simple ride-it-out hodling, like you were talking about, and then the optimized kind you're aiming for, or hodling without the ride-it-out part. Meaning you've got to take on that bit of risk you mentioned and actually find the right point to get out when things start heading down.
Yeah.
That obviously takes a bit more guts.
Yeah. So let me make this really clear. If you buy now and hold it till 2030, you can only win. There's no way to lose. I mean, I don't want to sound like Trump saying we're here just to win, but honestly, that's how it is. You can count on it. And sure, you can try to optimize it a little, like if XRP runs up to $3 and you sell, and then in the bear market it drops down to 30 cents, then you can buy back in for 30 cents instead of $3. The key is you get back in, then you can buy 10 times as much XRP as you sold before. And when the big bull market hits, you've got 10 times as much XRP as you do now. That's when the gap really blows wide open. And that's why we tried not to just hodl, which would be easy, buy and wait till 2030, but to try and find a solid exit sometime around June, July, August, even if you're down on your coin, you can buy it back cheaper later. In the next bear market at the bottom, when you need those famous guts again to say, yeah, it's the bottom, everything sucks. Nobody wants anything to do with it anymore. That's the moment to buy. And most of us know you make your money on the buy, and it's basically the same here. So we try to hodl a little more smartly, like trying to get out at least in the summer, right when everyone's in FOMO mode, when it's all hype and people are like, this is the greatest, I gotta be in. That's when you have to get out. You've just got to be able to do that. That's really the hardest part, leaving when it feels best. And then wait until it drops, and for the same amount you cashed out with, buy 10 or 15 times as many coins, and like I said, that's what really widens the gap. To me, that's an interesting alternative. And it's something we're also trying to do in our interview series, which we didn't pull off that well with Bitcoin when it was heading toward 126, because there were no signs of FOMO, no hype, no sign of some exponential run. It was just at 126 and then it suddenly dropped. That's why I think the next 2 or 3 months are going to be super interesting, given everything we've been talking about here. And in my view, personally, it's worth getting in for those 2 or 3 months, and then you either get out and buy back in at the bear market lows, or you just hodl through with a 20-30 mindset, let it ride, and you'll still be happy with solid performance. It'll just be a lot less than if you manage to optimize it. But optimized hodling means you've got to have a good feel for it.
And of course, you need strong nerves. Since we're running out of time, any final tip for our viewers on how to keep that calm and keep believing in the choice they made?
Yeah, I mean, there's one line I really like, kind of as a headline. An investment in crypto can be life-changing. I've been through about 15 years of telecom and the internet. And in 2003, I lost my first employees to Cisco. They were employee number 2 and 3 at Cisco Germany. So I was really deep in the whole thing. And even though I was right in the middle of it, financially I didn't pull out enough to say, okay, I'm set. And here there's a new chance. What we're talking about here, blockchain and crypto, that's something huge. Stuff like this happens maybe every 20 or 30 years. And anyone who says, I'll just check it out, that's not an investor in my book. So my advice for everyone is you need to be in, even if it's only 10% of your money. You should be in. And if you're on the right coins, I always tell my kids, if I manage to be on the right coins, you'll never have to work again. That's what it comes down to. Those are the kinds of prospects in there. We're not talking 10, 15% a year. We're talking 200, 300% if you're on the right coin. And I still think XRP can hit 50 to $100 in the next bull market, maybe even more. And if you've got 100,000 of those XRP coins, you should basically be set. But that's the scale. We're talking about, when we talk crypto and blockchain tech, all I can say is showing up is everything. That's what matters here. Otherwise, in 3, 4, 5 years, you'll regret it and say, yeah, I knew, but I didn't do anything. Do it.
But sure, before you do anything, you first have to be convinced you've picked the right path. You've just shown the path you're taking, and some folks in our community might be on that same path.
If even an old bastard like me is convinced,
Wenn ich das jetzt gesagt hätte, hätte ich mir auch was anhören müssen.
Then that's really it. I can only tell everyone, go for it.
In the end, it's your path. Anyone who wants to follow it has to decide for themselves or find a route that fits them. This isn't investment advice. You're basically just letting people in on how you're setting yourself up.